Hello guys, this is Damian from forexbot.com and welcome back to our video examples on a live forex trading account. We remind that the trade you will see here is with and only educational purpose. So currently I'm looking at the 5-minute chart of the New Zealand dollar American dollar forex pair, also known as the Kiwi. I decided to approach this chart for my trade because I kind of see something like a pattern over here. Notice that the price has been decreasing over here, like during the last maybe nearly couple hours, an hour and a half, and suddenly the price started moving sideways. However, this sideways consolidation resembles a falling wedge chart pattern. Here it is. That's a real wedge. At the same time, I spot something else. When I zoom in the chart, I notice a big hammer candle over here, which was the signal that the price will probably start an increase. This increase over here. This increase over here. As a result, I believe that if the wedge breaks through the upper level, this will be a confirmation that the price will continue an increase. For this reason, I'm currently waiting for this signal to see a breakout through the upper level of the wedge. If this happens, I will simply buy the New Zealand dollar American dollar forex pair, placing a stop loss order at the opposite side of the wedge, maybe below the hammer candle. At the same time, I plan to stay in the trade for a minimum price move equal to the vertical size of the wedge in its widest part over here, taking the distance from this bottom to the top of the wedge. Then I'll take this distance and I will apply it starting from the moment of the breakout. So for example, if the wedge breaks over here, my target will be located somewhere over here at 0.68 56 maybe, or 55. If the wedge breaks later, then the target goes lower as well, at 0.6854 approximately. So I will store this rectangle over here and I will apply it in the moment when the wedge gets broken in bullish direction. Then if I go long, I will place a stop loss order, as I said, below the lower bottom of the wedge, which is the lower candle wick of the hammer candle pattern over here, which will keep my trade protected and secured. And then I will place a take profit order at the top of the rectangle after I apply the rectangle starting from the moment of the breakout. The interesting thing of the wedge patterns that appear as a reversal, because this is a reversal wedge since we had a bearish trend previously, the wedge acts as a slowdown of the previous price decrease. So if this is the decrease, notice that the direction of the decrease is the move during the decrease was very sharp, and when the decrease was like completed, the price started moving sideways, which means that this sharp decrease is currently nearly like a sideways move. The price is still like moving in bearish direction, but the inclination of the average move is like slight, meaning that the previous bearish trend is currently slowing down, which is the purpose of the wedge. So this slowdown hints that the price might actually reverse, meaning that the bears are probably losing their power over the bulls and the bulls might take over. Also, I would like to mention that no matter what the previous trend is, bullish or bearish, a falling wedge chart pattern always has bullish potential. So if we had a bearish trend, since we have a bearish trend, and the price is likely to go in bullish direction, we say that the wedge is a reversal pattern. But if the previous trend was bullish, we say that the wedge has continuation character. So no matter if the falling wedge will have continuation or reversal character, you should remember one thing. The potential of the falling wedge pattern is only bullish. Only bullish. No matter if the previous trend is bearish or bullish. The potential of the wedge is only bullish. And depending on the previous trend, the wedge could act as a continuation or as a reversal. So now I'm going to pause this video and I'll come back to you when I see the confirmation through the upper level of the wedge in order to show you how I open my trade. Okay guys, I'm back about half an hour later to show you that the rising wedge is currently breaking through the upper level, and since the price is very high, I am instantly, you know what, I'm not going to buy now, by the way. Maybe I will wait for a pullback because the current candle was relatively sharp, so there is a big chance that the price will return, but notice that I'm like well focused and I am waiting for that pullback. And when the price reaches like half of this big bullish candle, I will instantly buy. Because if I buy now, I will lose like a big part of the potential of the trade. So I will wait a little bit more, like maybe a minute or two. Let me open my clock. 5:43, okay. The thing is that in many of the cases you will see that the breaking candle will actually shoot up with a relatively sharp price move, which will, like in our case, completed nearly half of the potential of the trade. So if I open over here, I will aim like for only this part. Which is not very bad, but still will mess up our risk to return ratio, and I'm buying now. Here it is. Alright. Now things went better because I managed to contain some of the spread. I managed to contain the spread with this like strategic waiting, and the trade after the spread is still below the candle that broke the wedge in bullish direction. Now let me position the other levels on the chart. Stop loss goes, as I said, at 1.6820, 6827 maybe. Okay, and take profit will go like 0.6854, and now I will mark this level with a green line, the take profit level. Here it is. And I'm gonna mark also my entry point with white, as I always do. Okay, now I have all my levels on the chart. Pretty decent. By the way, I intend to move my stop loss order higher because I'm not sure that because this way we will have something like 1 to 2 win-loss ratio, since the target takes like twice less distance than the stop loss, and there is no point risking that much for such small amounts. So I'm going to readjust my stop loss order so it will contain like the last top on the chart but not the top of the candle, and this way the trade will be like more reasonable in my opinion. Okay, Now I have all the levels on the chart, and now I'm going to pause the video again, and I'll come back to you later with the results from this trade. Okay guys, I'm back about 4 hours later to show you that after 3 consecutive bullish impulses, the price action has reached my target at 0.6854, which has triggered my take profit order and closed my trade on 100% profit. So now I'm going to do the calculation in order to determine what is the percentage profit from this trade. So I entered at 0.6844 and I traded to 0.6854, which is 10 pips profit in this trade, which equals to 0.001 from the current exchange rate of the New Zealand dollar American dollar forex pair. And when I divide this number by the entry point, which is 0.6844, I get a result of 0.00146113 and 4. And when I multiply this number by 100, I get the percentage profit from this trade, which is approximately 0.15% pure profit from the trade. So I hope you like this video that shows how to trade a falling wedge pattern. This is pretty much how it works. I will repeat one more time. When you see the falling wedge to break through the upper level, you simply trade for a minimum price move equal to the vertical distance between the upper and the lower level of the wedge in its widest part. As you see, I use this gray rectangle to measure this distance. Here it is. And then I applied it starting from the moment of the breakout, which gave me my take profit level and my minimum target in this trade. So thank you very much for watching. This was Damian from forexbolt.com. Looking forward to see you on the next live forex trading session, and until then, I wish you happy trading.